All right, good morning. Good morning. All right. So clearly yesterday, we all know market sold off pretty sharply. Um, Big red bar here on SPX suggests it's going to go lower. Markets are stabilized here this morning. There's just some whipsaw. I don't have the news on, so I assume some news came through. Drove the futures down and they're popping back up again, which would suggest things are a little oversold here short term. And SPX today, my quotes were bouncing around like crazy. I don't know what was going on there, but there's a huge open interest on the puts at 39.50. And just looking at the range here, 38.60 has premium. Play it safe. 39.70, I would say, is a no-brainer today. 65 by 85, and just go whatever wide to get the premium. You want to get a little tighter to 39.65. It's 90 by $1.25 right now, $1.30, bouncing around a little bit, which I think would be fine. I mean, look, this market's been a little wacky to say the least, but to imagine that these markets are going to rally back up to the top of this red bar doesn't make much sense historically. Historically, what happens is they stay down, an inside day, a narrow range day where it consolidates here. And it's Friday. So you got to expect there's going to be some testing of the lows and jiggles back and forth here, which is going on right now. I said historically this would stay down here, which would set up next week a 1, 2, 3 lower. We'll see where the day ends. Just based on this pattern, I would think a pullback between the 20 and the 50, somewhere in here, would be to be expected. And based on the strength of this move up, that should be a buyable opportunity as long as we get a setup. We'll see if that happens next week. So on the put side, just looking at the quotes here. You know me, I'm always looking for what potentially could be a sure thing without indigestion. And wow, it's a pretty big juice there. Whoa. You can go down to 38.30, 38.30, which is below the 50. $1.05 by $1.25. And there's stuff below that, but unless this market's going to have a mini crash, I cannot believe that the markets would get its way down there and get through the 20, these gap areas, hit the 50, and get down into there. So yeah, 38.40. Yes, 38.30. I think, and as I said, I always look at these things as what potentially is a no-brainer. And a no-brainer means like there's no way in hell you're going to get stopped out. We've had some close calls, but overall, taking less and getting far away has proven to be very well done. So you want to get closer to it. There's some big premiums there. 38.50 has a pretty decent size open interest. So I would say it was unlikely to get through that area. You got moving averages there. You got gaps staying below that. Um, I think it'd be just fine. 50% retracement of upswing. Yeah, I think normal, John, but into next week, not today. I think the only thing that could get the markets to take that kind of a nosedive today would be if these interest rates spiked up to 2% today. It doesn't look like that's going to happen. We've got the 10-year approaching this lower level. As we discussed for months, the 30-year was heading down here, and it's already there, a little bit, below the pivots. So it's into a significant area of support. If the 10-year is going to drop, I imagine this will drop a bit more. But going back to the 10-year there, this is a huge area of support, and that would coincide with the upside of the 10-year getting up close to 2%. And because of the way this has gone up on the weekly chart, it's gone a bit vertical. It's extended from any support. I think it's highly unlikely that it gets through that. So with the what's unnerving the markets here, reaching a level of, hey, let's take a breath here and see that the world hasn't come to an end, so to speak. I think the market finds that stabilization as it pulls back, potentially into that 50% area or down toward the 50 MA, which institutions love to buy at and defend. So we'll see, if that's what actually plays out into next week. And hopefully at that point, the internals, especially sentiment, lines up, because as we saw yesterday, I posted the chart here in the room, and I posted it to subscribers in Telegram and spoke about that why weren't they buying puts yesterday on one of the most nasty down days? And that, shows a little bit of complacency or overzealousness on the bullish side, which has been okay, but there has been some nasty down moves. So if we do get that lower move, would be great to see those option traders becoming more bearish, and that, would support a pullback into that area and, a buyable setup. All right. So the Qs, that was pretty nasty with the gap down. It stopped at this area of this prior low, and they're moving a bit lower here, as you can see, 312. Well, it's about where yesterday's close was, give or take, because it went up overnight. So, as I said, hanging down here at the bottom of that wide range bar, would be typical. Sentiment, Jake, is actually at the close, it came off. Remember yesterday I showed you it was at a minus 100. It actually lifted off from that. Breath did. So breath is not at a bullish extreme, and sentiment isn't even anywhere close. So there is gas in the tank for this market to go lower. Right. And Nasdaq futures are up here a little bit. You can see this little shelf of support right here. And we'll see. I mean, if it breaks there, it's obviously, there's nothing to stop it from going down. I'd be surprised to see it start that journey today. But it looks like a probable thing for it to do. There's just nothing to the left that could stop this. And we've got this large topping area. As always, wide range bars create voids up above. So if it can find some footing here, it would have to get through 12,900. So, that's a lot of work to be done before we could even consider the possibility of it poking further into this area. And right in the middle of the wide range bar, which we always look for it to stay in the lower half. And there's a whole bunch of congestion there, and you got 13,000 whole numbers. So I'm just going to get a lot of jiggles today. Q's levels. Well, got the same support, 312, and there's nothing to stop it from going down. So, it traveled a long way yesterday, and it started with the gap down. And so the gap held for the longest time. And then, later in the day, the bottom gave way. And, I shorted this. I didn't hold on to it down to the lows, but, I shorted this one on this retest, which is right around here. And then as I covered, it just kept plummeting as it went down through those lows there and went down to the next level. So it's kind of a critical place for it to hold here today. And so there's nothing down here. There's nothing to stop it. But again, the gap down, it down to that level, it's like I said, it's traveled a long way. So, unless something's really going to unnerve this market here today more so, I think it's not going to go very far. 310 critical. I don't see that as being critical. I don't see that. I don't know if you're looking at open interest and options of that being anything, but just looking to the left, there's nothing there. So if the whole idea behind a 1, 2, 3 continuation pattern is based on the fact that the wide range bar creates a void above, which opens up the possibility of retracing into that. And so the number 2 bar, which would be an inside bar on the daily chart, is a day that is spent holding that level. So it kind of, sometimes I use the term as refilling the gas tank and going sideways there, and traders seeing that it can't go up, and then it starts to break, right? The number 3 bar triggering under the number 2 bar. 310 not going to stop anything, gamma level, this gamma thing. As I said, there's some things interesting about it, but these option traders that don't look at charts, they sooner or later get run over by a void, because whatever they're looking at, gamma, theta, vega, delta, whatever, right? Everything eventually comes down to looking to the left and support and resistance. So 310 today may offer something only because gap down, traveled a long way. And so it may, if it continued to break now, just because it's down a lot already, that may come into play. But if it hangs around here all day today and then starts lower on Monday, don't put your bid there, because you're just going to get creamed. And look at the weekly chart here on the Qs. This is setting up for the potential for a measured move lower. Right? We'll see where this ends and what next week brings. But historically, this is a pattern where you get a pullback and a buy setup that triggered, and it fails, and this starts heading lower next week, it's got some room to go lower, because there's, really not much here to the left either because of the way it went up. So, just look, kind of eyeballing this kind of puts it down into this 290 area, give or take. So, these measured moves typically line up with some support. But, you can kind of eyeball that and see. So we'll see if this actually follows through next week. If we see the 10-year spiking up into that 2% level, and, oil got smashed yesterday, stopped at the 50 MA, hit through those pivots a little bit. And now that it's stabilizing, as you can see. But if interest rates are going up, oil's going down on Monday, I think it's a pretty good assumption that equities will be dropping, and that measured move may actually play out next week. All right, other futures here. YM, which has been leading the way higher. Topping tail, really not a big deal, just looking at this, but it's forming what might be a head and shoulders top. And, and the idea behind a head and shoulders top is a breakout failure. And the fact that you've got what's called the neckline, which is, okay, this is tries to hold this support. It goes sideways, refill the tank. And then when it breaks, there's nothing to stop it from going down. So maybe this holds if that plays out. Again, we just see how, we see what is. Once we see what is and we find a bias about what is on our chart right now, we place a trade and we place a stop loss because there's no guarantees that it works. But, we look at patterns and that have a high probability historically of doing one thing versus another. I mean, that's basic idea about trading, right? And I always like to say you don't need any of this stuff, trend lines, fib lines, VWAPs, and oscillators and all the rest of it. You just look at what is and what's to the left and, see what happens next. All right. Russell, it's been doing well. Got creamed yesterday, sitting on the 20 already, just jiggling around down there. And it's got room to fall. Odds are, I think that things kind of hold here, maybe down a little bit, but it would be unusual to have another big down day today, as we saw yesterday. We looked at bonds. That gold is just kind of jiggling there. When you're trading 1, 2, 3, your initial stop is always under the wide range bar would be a long. So we've been talking about downside, Norbit. So a 1, 2, 3 pattern such as this, if this was a completed bar, years ago, back in the 90s, you could put your stop above the inside bar. It tends to be less successful today. So I go a bit further. Now, there's another pattern. There's a 1, 2, 3, 4. Can you count another bar? Now, if you were to get another bar, say this ends this way, and the next bar pokes up above this one and fails, that's like what I call like a money bar type of setup. Like can't even remember that ever failing. And so, you go ask Dan Gibby for a loan, max out your credit cards, sell it short, and retire. It's a joke, of course. Okay. Silver jiggling around there. Let's just stay away for now. And, transports still look great. Getting a rejection like this within an uptrend is really not a big deal. So we'll just see how this follows through or the lack thereof. All yours, Dan.
All right, good morning. Yeah, the bounce scenario was playing out better until that little Fed news. And I didn't read it, but they said something about not providing additional stimulus, whatever, to banks. And that's what I think would send the market into, what do they call it? The taper tantrum, remember? Whenever the Fed talks about removing the punch bowl stuff. And what's the punch bowl right now for the Fed? Well, it's two things. It's the $120 billion a month of bond purchasing. And yeah, and that's what they do, creating a backstop of all these corporate and municipal debts that they've been doing for a year now. And then keeping the 3-year down. If any language of those two start to loosen up, that's what I think will create the tantrum. All right, we did a nice call spread on Tesla into the close yesterday. We bought puts on the Qs and then legged into a bear put diagonal spread. I just gave an adjustment. Oh, so everything else, I have no alarms going off. Everything's fine for now. Wing here I posted. Greg found that yesterday. Under yesterday's low, a sell set up there at the 20. And I like the fact that it's gapping up because then, hopefully it won't trigger in the first 5 minutes and reverse on us. Go to gappers. Ford gapping up to yesterday's high. Maybe if it can go sideways, then maybe next week. This little guy, it's gapping up too much, but something's up with it. Deutsche Bank, I just saw going by the ticker. It's pulling in here a little bit now, but into the gap fill. I'll keep an eye on this. Maybe next week sell a put spread. I like the weekly monthly. Sends. Oh, sends I posted. Look at the weekly chart. It's a buy setup. So over the week's high, stop week's low. NOV, we have a put spread that we're gonna have to roll today, if not stopped out. This looked like a Reddit toy yesterday. Gapping down here, 30-minute low. That looks like a day trade short. FedEx, I posted as a watch to sell way out of the money put spreads. Look, that's a beautiful pre-market strength. That is a big gap, but look at this going sideways. 1, 2, 3, 4. That is very bullish this morning. Tap got a downgrade, but no pattern. Still had earnings. I don't see any gap, but strong uptrend. Holly North, I think, had earnings $90, but no pattern. Candidate actually for a Condor. Nike earnings 140. Gapped into the middle of nowhere's land. I don't know what to do with that right now. Hey, McGraw, you mentioned this the other day, and I said I was waiting for a potent reversal. And I stopped looking at it, but Wednesday, that was the potent reversal I was looking for. So now we can keep an eye on that of selling a put spread. Gapping down, $24. This looks lower. Let's watch that 30-minute low. That looks ugly. That might, if that goes all the way to the 200, that would be a huge target. 142. We'll come back to it. IQ, we entered yesterday. Amazing relative strength. Cal, gapping up a little bit, no pattern. CTOS, it's a deep retracement, but you can buy this for, for a 1 to 3 day swing trade over a prior day's high. I looked at the puts, they don't have weeklies, but we might even be able to sell the 330s for today. They closed at like 60 cents by $4. But even if we were able to get $1, that would have been a good bet to take yesterday. LVS, I have an alarm over, yeah, I think that's 66-ish, whatever. But this is bullish price action at resistance with a bullish monthly. All right, yeah, I'm already out of my list, so good timing, John. Let's go right to yours. Here's this CPANG IPO that's been weak. NP, I don't like that it's given up the gap, so I don't like that at all. It's a watch. Wabay, it has to be over yesterday's high. FLGT, I don't like the bearish inside bar. Sono, there's no price void. You have a bunch of overlapping bars. Oh, hey, John, you're dropped in. I don't like this at all. Sorry, John, starting off with a bad review, but I don't like any of those right now. But you usually have great ideas, so don't keep them coming. And also, I'm not looking to go long anything right now, unless something is amazingly strong. I got an IQ alarm. We're in it already, but like this, that is a picture of amazing strength right there. Market's closed at the low. This closed on the penny high. All right, let's watch old FedEx here. I'm not going to even look and get myself mad by looking at the options. Let it settle down 5, 10 minutes. But I agree. I'm not expecting a big day either here. I would just love to have a 1, 2, 3 party on Monday. So what that means is wide range bar, an inside bar that stays 1/3 in the range, and then we short the lows on Monday. Fang department, Facebook relative strength. I mean, this, I don't know. Got some nibbling going on, but I don't see any great patterns here. Tesla is down to 35 cents to close. Yeah, I already moved it, the stop to the 30.